Well, as we take a look, tech stocks hoping for highs to continue on expectations that a Fed rate pause means easy money access. But with the New York Fed's John Williams indicating rates will remain high alongside inflation, a tech trader's out of step with the Fed's direction and reality. Joining us now, Erika Klauer, Jennison Associates Technology Equity Portfolio Manager. Thank you for joining me this morning, Erika. So as we're seeing here, though, tech does still seem to be fighting the Fed in terms of when it's expecting a rate pause. Who is more in tune with reality? Obviously, the Fed looking at some backward data, but investors, especially in tech, really going ahead here.
Well, you're right, Rochelle. Thank you so much for having me today. I think that the interesting thing that's going on right now is we have a push-pull scenario between the incredible new innovations that are going on in technology that apply to all different industries, whether that be automation and robotics to artificial intelligence. These are new, very usable technologies that have significant implications on things like productivity of workers, against a backdrop of tighter lending, more difficult credit conditions. And so really here at Jennison, what we're trying to do is piecemeal through and figure out which companies can benefit from those growth vectors while withstanding the headwinds associated with the economy.
And so, on top of that, we have a slew of economic data out this week. We've seen the market reaction with every bit of data that's giving them a hint of what the Fed might do. We have core CPI and PPI, retail sales, consumer sentiment. So as people are looking for short versus long-term headwinds at the moment, what are you tracking?
Well, I think that the main issue that we really look for are the tools of innovation that are becoming more and more prevalent in this economy. I'll give an example. For artificial intelligence, a lot of people have talked about ChatGPT, but ChatGPT is really something larger, which is known as a generative tool where you can actually create content out of machine data. So, for example, drug developers can look at reams and reams of data and come up with better tools for predicting what drugs will be effective. Or alternatively, one can try to create a marketing campaign with input tools using generative AI, and or lawyers will be able to create legal documents using generative AI. So from Jennison's perspectives, we're really a bottoms-up company and are looking for these trends in the companies that can capitalize on them. So that, I think, is the best strategy now, is to try to figure out which companies are really at the vortex of these extremely innovative trends that we're beginning to see materialize in early 2023.
And as we're seeing governments really race to get to the forefront of this, there's also a little bit of a moment of pause here. We see the Wall Street Journal reporting that President Biden and his administration weighing possible rules surrounding AI tools like ChatGPT. What does that do for the investment landscape?
So you bring up such an interesting point, which is that we've never seen such significant government intervention, both positive and negative, for implications for technology. On one hand, if you think about and you added up all of the initiatives and support that governments have announced around the world to build more semiconductor manufacturing, this is very positive as it helps companies become more innovative, and it brings next generation technologies to the market sooner and in a more inexpensive manner. At the same time, you have governments at battle with one another in terms of who gets access to those technologies. Many of the US generated technologies, as well as European based technologies, are now being restricted and banned from shipment into China, which of course is a negative, and forces Chinese governments into trying to homegrown more of their own technologies. And as you say, there are oversight tools that are going to be needed for the efficacy and accuracy of many of those ChatGPT-like functions.
So then you note a couple of these multi-billion-dollar areas of opportunity that you note. But when you think of the supply chain that does involve other countries like China, as the US gets more up to speed on this, who are going to be the big winners here company-wise? I know you're looking at Broadcom and NVIDIA.
So certainly at Jennison, we are looking for the companies that have the highest barriers to entry, the best possible management teams, and the strongest balance sheets that are leveraged to those trends. At the very top of that list is NVIDIA, which has done very, very well so far in 23, but we still see a lot more room to go. We also like Broadcom, which makes custom products for the likes of Google and other hyperscalers. And we also like Advanced Micro Devices, which is a viable and important contender to NVIDIA's dominance within the data center, but also has a very important and growing position within the personal computer business, gaining quite a bit of share from Intel Corporation.
So certainly opportunities to be had here, even though the future not necessarily set in stone a lot, especially with policymakers on board as well. Erika Klauer there, Jennison Associates Technology Equity Portfolio Manager. Thank you for your time this morning.